and that is basic knowledge, basic financial knowledge. Now, as I was saying earlier, most people tend to think that finance is very difficult to understand. And as I said earlier, I'm repeating, if there is something very easy to understand and learn and apply in life, it is finance, because it is language of money. Now, friends, please remember, we have now about 20 minutes remaining, and this is going to be a series of sessions. So we will close it at 5 o'clock, and we would continue from here in the next session that we have. So do not worry in case we have to foreclose it at 5 o'clock. Now, understanding basic financial statements and what the basic financial statement are, friends, the good news is, for being good in finance, and I can tell you with full confidence, is just to understand three statements. And what these three statements are? These three statements are profit and loss, balance sheet, and the cash flow statement. Are they very difficult? Are they very complex? Of course not. Of course not. We will discuss them one by one, and I will try and explain to you with the help of examples. So first of all, I'm very sure that most of you would be quite well versed with the P&L and the balance sheet and the cash flow statement. But as Usha ji mentioned in the very beginning, that in response to the offer of award, many of the members of Wikiflow responded, but they did not submit the financial statements, and primarily there must be some reason behind it. One of the reason can be not having the system of preparation of the financial statement in the business, and second reason can be perhaps the lack of understanding about these financial statements. So let me start and tell you in brief. Number one, what does P&L tell you? What does P&L tell you? Very simple. P&L tells you, as a business, how much is the income that you have generated, how much are the expenses that you have incurred, and the difference of the income and expense is either a profit or it is a loss. If the income of your business is higher than the expenses that you have incurred, that means you are earning profit. If the income that you have earned in your business is less than the expenses that you have incurred in your business, it means you are incurring losses. So this is what your P&L statement tells you. But it does not stop there, because for the purpose of decision making, we need to understand profit and loss in much details, and that is what we will do. What does balance sheet tells you? Again, very simple. Balance sheet tells you what are the assets in your business and what are the liabilities of your business. Assets would mean, assuming that you are a manufacturing company, asset would mean that you have a land, you have a building, you have plant and machinery, right? And you have a working capital, you have inventory, you have receivables, you have cash and bank balance. So these are your assets. And what are your liabilities? Liabilities is the capital that you may have put into the company, share capital that you may have put into the company, or the loans that you may have taken from the outsiders, from the bank and the financial institutions, and the goods that you may have purchased on credit. So they all will come in your liability side. So how do you figure out whether it's a good P&L or a bad P&L? You will figure out good P&L and bad P&L based on what is more. Income is more, good P&L. Expenses are more, bad P&L. How do you figure out good balance sheet or bad balance sheet? You will figure out good balance sheet or bad balance sheet depending on what is the figure of reserves in the balance sheet of your company. What is the figure of reserves in the balance sheet of your company? And what is this reserve? Is very simple. It simply means in your business, if you have been making profit and you have been plowing back this profit back into your business. So the amount of profit that you plow back, it goes and sits in the balance sheet of your company as reserves. So जितना आप प्रॉफिट को प्लो बैक करते हैं उतना आपका रिजर्व्स का फिगर ज़्यादा होता है, और जितना आपका रिजर्व्स का फिगर ज़्यादा होता है उतनी आपकी कंपनी की बैलेंस शीट स्ट्रांग होती है. हम लोग बैलेंस शीट को भी डिटेल में डिस्कस करेंगे. व्हाट इज कैश फ्लो स्टेटमेंट? अगेन वेरी इंपॉर्टेंट. कैश फ्लो स्टेटमेंट्स टेल्स यू व्हाट? कैश फ्लो स्टेटमेंट्स टेल यू कि मेरे बिजनेस में पैसा कहाँ से आ रहा है. कैश इज कमिंग फ्रॉम वेयर ऑल प्लेसेस and where all the cash is going from my business. How do you figure out is a good cash flow or bad cash flow? Very simple. If the money coming into the business is more, money going out of the business is less, your company has a good cash flow. The money going out of the business is more, money coming into the business is less, that means you have a bad cash flow in your company. That means your business is in trouble and you need to do something about to correct it. Right. Now we will start with the P&L statement and understand P&L. So how do we understand P&L? Number one, जब भी हमें P&L को समझना है,
चलिए सीधी करना, चलिए आगे चोंच इधर कर दो.
Okay. So first of all, understand in case of P&L, we are trying to understand the profit and loss statement. So the first thing what we need to understand is the sales, and sales is also known as top line. And let's say this company's sales is 1,000. This company's sales is 1,000. Why it is called as top line? No rocket science. It is called as top line because the figure of sales is appearing in the top of the income statement, and that is why sales is also referred as a top line. From the sales you minus something which is known as RMC, raw material cost, right? And you also minus something which is known as manufacturing expenses, assuming that you are a manufacturing company. If you are not a manufacturing company, then you will not have a manufacturing expenses. You will only have a raw material cost. Raw material cost, agar aap hai, that means you are a trading company. Okay. So let's say the RMC of this company is 400 and manufacturing expenses of this company is 100. So when you deduct 400 and 100 from 1000, what you get in your hand is 500, right? 500. This 500 is known as gross profit. This 500 is known as gross profit. Some people call it as gross margin. Some people call it as gross profit margin. Some people call it as gross value addition. Some people call it as gross contribution, or some people call it as gross value, gross contribution. So they all mean the same thing. You call it gross profit, gross margin, gross profit margin, gross value addition, gross contribution. They all mean the same thing. So now what you do? From the gross profit, you minus something which is known as SG&A. SG&A is selling, general and administrative expenses. By the way, raw material cost and the manufacturing expenses put together are also known as COGS. Okay, so please pardon me for overwriting. COGS. COGS is cost of goods sold. Now what does it mean? It means from the figure of sales, if you minus the figure of cost of goods sold, what you get in your hand is your gross profit or your gross margin. From the gross profit, you deduct the selling, general and administrative expenses. Now what these expenses are? These expenses are administration expenses, distribution expenses, warehousing expenses, marketing expenses, legal expenses. So basically all expenses other than your COGS will be part of your SG&A, selling, general and administrative expenses. Now let's say this company has the figure of SG&A which is 100. What you get in your hand is 400, And this 400 is known as EBITDA. It is known as EBITDA. I am sure all of you belong to the business community. Many of you sit on the board of directors of the companies. Many of you are directly involved and engaged in running of the operations. This term called EBITDA, you must have heard at least 1,000,000 times so far. And why 1,000,000 times so far? Because this number called EBITDA is very important for any business. Is very important for any business. If you want to control, if you want to have a good control on your business, you just need to focus on this one number. And I can tell you, your business will remain in control. And that is how world over, the CEOs, CFOs, the chairman, the managing director, the board of director, every one of them are always concerned about EBITDA. Always concerned about EBITDA. As much as, I was with this company called ArcelorMittal, and in ArcelorMittal, Mr. Mittal every quarter will send a mail to all the senior team members. I was with this company for 6 years, must have received this mail 24 times, and I would remember Mr. Mittal in every mail that we received for those 24 quarters always highlighted 3 things. Number 1 was health and safety. It was so critical and crucial in our organization. Number 2, he would focus on EBITDA. And number 3, he would focus on deleveraging, debt equity ratio. So that is the importance of EBITDA. We will talk about EBITDA going forward as well. But another thing that I would like to tell you, EBITDA is also important from the point of view of valuation. So world over, whenever companies are bought and sold, one of the factor any buyer of a company would look at is how is the EBITDA of the company. And the valuation will be decided based on the EBITDA. If the EBITDA is good, company will get good valuations. EBITDA is not good, company will not get good valuation. Right. So from the EBITDA, what you do, you minus 2 things. One is depreciation and the other is amortization. Now, what is depreciation? Depreciation, we all know. In the business, we have tangible assets, intangible assets. Because of use of these tangible assets, intangible assets, their values are going down. So reduction in the value of a tangible asset is known as depreciation. Reduction in the value of intangible asset is known as amortization. So let's say again that figure is 50. So what you get in your hand is 350, and this is known as EBIT, earning before interest and tax. By the way, EBITDA is also known as cash operating profit. EBITDA is also known as cash operating profit. And why it is known as cash operating profit? Because this figure of 400 that you have got in your hand in your business, where have you got it from? You have got it from the operations of your business, and that is why it is known as cash operating profit. So from the EBITDA, you minus the depreciation and amortization, you get 350, which is known as EBIT. From the EBIT, what you do, you deduct the interest, which is also known as finance cost. Let's say that figure is 25. So what is left in your hand is 325. This is known as EBT. EBT meaning earning before tax. And it is from this figure, EBT, we will minus the tax. And let's say the tax is 100 rupees. What you get in your hand is 225. This 225 is known as EAT. EAT का मतलब है अर्निंग आफ्टर टैक्स. और EAT का एक और मतलब है, और वो मतलब क्या है? वो मतलब ये है कि अगर आपके बिजनेस में आपके EAT का फिगर पॉजिटिव है तो आप यू कैन ईट इन योर बिजनेस. EAT मीन्स ईट. If the figure of EAT of your business is positive, you can eat in your business, else you can not. Right? So this is how you understand P&L for profit and loss statement for the purpose of decision making. Now please remember, it is not a statement alone. ये सिर्फ statement नहीं है. This is the dashboard, or this is the springboard of your business from where you can jump. You can take a higher jump. Meaning what? Meaning, as the owner of the business or the director of the company or the promoter of the company, what I need to do? I cannot look everything by myself. and I cannot look everything by myself, and definitely I cannot look all the things physically. So what I need to do, I need to start a system of budgeting in my business, and then focus on few numbers. And what those numbers are, the first number is gross profit. So if I want to have a control, if I want to scale up my business, if I want to take my business to places, if I want to ensure that the performance of my business is good, focus on your gross profit. Focus on your EBITDA. Focus on your EBIT. Focus on your EBT, and focus on your EAT. So remember these fives: the gross profit, EBITDA, EBIT, EBT and EAT, they all are your business drivers. तो ये आपके बिजनेस ड्राइवर्स हैं. अगर ये सही तरीके से चलेंगे तो आपका बिजनेस सही तरीके से चलेगा, और अगर ये सही तरीके से नहीं चलेंगे तो फिर आपका बिजनेस भी प्रॉब्लम में आ जाएगा. So this is about the P&L. Now friends, with this we can come to the I would come to the close of what I have to share with you in this session. And as I said, remember, it's a continuing series that Usha ji has planned, or Fiki Flow has planned. We will have the next session, which you will get to know in due course. My recommendation to every one of you would be, now that you know what all we are going to cover in this session, build your questions, build your queries. So next time when we have this session, whenever, we will first address your questions and queries, or I will ensure that in the course of the discussion your questions and queries are taken care of, so that this program helps you directly, right? So with this, I put a stop to what I have to present to you, because it is already in my watch 4:57. 3 minutes हमारे पास में है. Usha ji, I am now handing over it to you, so you can please take it from here on. Thank you so much to every one of you. Thank you for your patience hearing, and over to you, Usha ji.